Foschini consists of 14 trading brands and sells fashion, jewellery, accessories, cosmetics, cell phones, homewares and more. It trades on a price to earnings ratio of 19.7, a dividend yield of 3% and has a market cap of 38.4 billion rand. So these guys have their fingers in almost every single pie in terms of retail, other than grocers. I know you had a look at their sort of revenue mix. Do you want to remind us of where they make most of their money?
Yeah, they actually sell more cell phones. So cell phones contribute more in revenue than jewelry, believe it or not. So, but it's mostly activewear and more so kind of fashion items. So it's like 35% normal run-of-the-mill clothing, which is probably lower than most people would anticipate. And there's a cosmetics element in there too, but it's probably too small. So in terms of diversification, I think this one pretty much cross everything else.
So in terms of activewear, that's like Sports Scene and Total Sports, and then the clothing, there's obviously
and
the Foschinis.
is also inside the
it's
activewear.
like outdoorsy type.
That's nearly 20%.
The activewear.
Activewear.
Yeah, so, and those are good brands, you know, they sort of suck you in, even if you don't feel like going, you just sort of find your way walking into the shop.
Let me go see if I can get a pair of socks that I don't really need.
Yeah, and then of course there's the Markhams and then the Foschini stores. In terms of going forward, obviously we like the sector. What are their expansion plans in terms of, you know, maybe international diversification? They bought a business recently in the UK, Phase 8, eh?
That's right. So, you know, I mean, I think it's kind of run of them. I know everyone wasn't kind of excited about that, but I think what South Africans need to realize is that South African businesses, their investable universe mustn't be confined to 54 million South Africans. And with GDP growth rates here in South Africa set to be lower than the rest of the, even some of the developed world, you have to look for opportunities elsewhere. And with borrowing rates pretty low in Europe and set to stay that way, and a recovering Europe, maybe it's not a bad time to be owning even a brick and mortar retail.
Pretty good.
Pretty good, and they're not the only one.
No, they said, you know, we saw Bright recently with a big acquisition. And
correct.
And this seems like a similar, I think Phase 8 targets 35 to 55-year-old women, mainly in the UK, but also with stores in Germany and throughout continental Europe. There's the share price. We do have a small stake in Foschini within the portfolio. We are slightly down in it, so when you see the price coming down, we bought it quite close to the crest. It's in terms of excitement going forward, you know, when you look at the big stakes we have in Woolworths and we've got big retail exposure in the portfolio, is it worth having a 6,000 Rand odd position in Foschini?
Yeah, probably not, because if you have a look at the similarity in all the share prices, you know, when the tide comes in, all the boats are floated, so to speak. So, but it's a pretty good business, and you get all the different coverage areas. So if you're looking
Are you hot?
I am hot. I am hot on it.
I agree with you. I am hot.
But you mustn't just call it Foschini. It's the TFG.
TFG, the Foschini Group. Okay, thanks for that, Sasha.